The Street opens with the green, recovering some of yesterday's losses even as US President Donald Trump threatens even higher levies on China. Consumer durables, select financials gain, mid-caps relatively outperform.
Titan climbs on the back of a strong showing in Q4. The standalone revenue growth comes in at 25% on a year-on-year basis. The company says the domestic jewelry business grew owing to a significant increase in gold prices.
Oil marketing company stocks, HPCL, BPCL, IOC, all of them trade higher after oil prices fall overnight. The government's also announced a 2 rupee per litre increase in special additional excise duty on petrol and diesel prices. LPG prices also increased by 50 rupees per cylinder.
Realty stocks, Brokerage Properties as well as Shobha, they climb on the back of a good Q4 business update. Brokerage Properties quarterly bookings crossed 10,000 crore rupees for the first time in Q4 FY25, while Shobha sees the highest number of new launches in Q4.
Sticking with the real estate space, Brigade Enterprises also in focus, up nearly 3% as the company has signed a joint development agreement for a premium residential project in Mysore with a gross value of 225 crores.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. Well, Mangalam, some green on the screen. We have come off the top, but I'll tell you what, put together yesterday's second half pullback as well as today, we've seen a good pullback from the recent lows. The hope is that now we try to defend the 21,700 odd mark, and the hope is President Trump
doesn't tweet anything in the evening.
Doesn't tweet. Doesn't say anything.
Put out anything on. Oh, just goes for golf. Actually, I guess that's what he should do.
Chill for a bit.
Celebrate his. We have a truncated week here.
Yeah.
Might as well put a truncated week in the US as well. But be that as it may, two things really stand out from yesterday's recovery. If you look at point-to-point recovery, it seems like it's close to around 600 points from yesterday's low itself. One is that the market breadth today is a lot better than what it was all of yesterday. So we have 2,100 stocks which are advancing for just about 366 stocks which are lower. And this gap between the green and red lines has been maintained since morning. So there hasn't been much wavering around out there. So that's a positive. The second factor is that despite, the sell-off that we've seen from highs, the recovery is holding on and the India VIX has come down. So the India VIX is down about 11%, has moved closer to 20 than, the 21, 22 that we were at yesterday. So that is another positive. So we'll just keep an eye out on how this pans out from here on. And the Nifty Bank, very close to the 50,300 mark, which is an important technical level to track. So let's see how all of that happens. But tomorrow's triggers are more important, right? One, because Thursday is a holiday. We have the expiry tomorrow. And then obviously the all-important RBI policy outcome. More than just the action, the commentary would be extremely crucial to track.
Well, that's right. Mangalam, today a couple of stocks as well are doing so well. And just one more point, yesterday the breadth of the market was dismal.
Yes.
It was only 200 stocks advancing, 2,000 stocks declining. But I'll tell you what, in yesterday's trading session, you had 300 stocks that gained more than 10% from the low point of the day. In the morning, there was some panic selling. And a lot of those stocks got picked up. Just to highlight a few stocks that have gained in the last half hour or so, Divi's Laboratory has now moved to the high point of the day. So good move is what we're seeing out there. Pull up the intraday chart of Coromandel as well. Big uptake is what you're seeing out there. And the stock is moving on very, very good volumes. So the market's being a little bit selective today. A couple of these names are doing quite well. Let's welcome Shilpa Rao from Prabhudas Lilladher for a technical check on the show. Hi, Shilpa. Good morning. More green than red today. What's it? A dead cat bounce? Or you think we are good for more?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the setup, yes, we see some pullback happening here, but of course 22,600 will act as a resistance, and above that 22,800 a very strong resistance for now. So any pullback also towards 22,200 can be a buying opportunity. Keep a stop loss of 22,000, and first target should be around 22,600, 650, and if we sustain that, then 22,800. But it should be only when the levels are coming. Otherwise, right now it's like a no trading zone. So immediate fresh levels to buy not recommended. So talking about Bank Nifty also trading at around 50,200 odd levels. So from here, the resistance is at 50,500. So immediate buying wouldn't be recommended. Any dip towards 50,000 mark can be done with a stop loss of 49,850. Stay long there for targets of 50,500.
All right, Shilpa, we'll come to you for stocks. Nigel, you spoke about a lot of stocks which recovered from lows yesterday. I'm looking at a stock that actually reversed from yesterday's high, and that's delivery. Just look at delivery, currently down 6%. The street read the acquisition positively, but maybe right now they're concerned about the company's ability to make it turn profitable. And at the same time, how do you navigate through the biggest risk of the acquisition of Ecom Express, having 50% of its revenue coming in just from Meesho, one client itself? So those are a couple of things we'll most definitely keep an eye out on. Yesterday's gain could also have been on account of short covering, because the market was so heavily weakened that maybe any recovery from the lows led to that short covering. The other stock that I'm looking at is Nykaa. Nykaa is, was under a wee bit of pressure in yesterday's trading session owing to the weakness that we saw in their fashion business. But beauty continues to remain strong for them. Early 30s growth in their beauty GMV and, mid 20s growth in their beauty net revenue itself. Yeah. That's done well. So that stock is up around 4%. And finally, I'm just looking at the entire jewelry space. Titan's up 5%. But look at the others. PC Jeweler up 10%. We have Thangamal Jewelry up 6%. Yeah. TBZ itself is up 5%. And you have a decent up move seen on Senco as well. Is this because gold prices have come off the highs and right now people are expecting buyer growth to increase as against just value growth on account of gold or not? Is the big question that we'll get an answer to.
Yeah, that's right, Mangalam. And with regard to that point that you're making on, delivery, I think only Equirus, I think that was one of the loan brokerages who had mentioned that the company just turned profitable and now they're gone with this acquisition. Exactly. Again, that will be on them. So kudos to them. A couple of brokerages pointing it out. On the whole, it looked positive, but for the time being, the street is taking note of some of those negatives. And I'll talk about gold. We have Akshay Tritiya that will be there on 30th of April as well. So look forward to that. But Shilpa is still with us. Shilpa, you want to leave us with a couple of picks?
Yes, Nigel, I have one buy and one sell. The sell would be in, of course, delivery. Delivery is showing some sort of weakness. It is heading towards 220. I believe that should be the levels again to go long. But from here, with a stop loss of 270, one can keep a short trade here for levels of 220. The other one would be a buy in Petronet. That is where, the other one would be a buy in Nykaa, sorry. Nykaa, it is looking very strong. The support is at 174 in futures. So that should be a stop loss and stay long for targets of 185 from here. Nykaa is showing a very strong long build up and I believe 185 levels shouldn't be very far from.
All right, we take that point. Thank you so much, Shilpa, for that. With that, in a market like this, let's get you some ideas of profit coming from our colleagues at Money Control Pro. Let's get in Varsha Bang, who joins in with a stock that she's been tracking. Varsha.
Today's ideas for profit is Saregama India Limited, India's oldest music label which holds 19% market share. The company has an extensive IP portfolio of over 160,000 songs, 70 films and 45 digital series. The company generates revenue across 4 key segments: music licensing and artist management, music related, video and digital content and live events. Saregama reported strong growth in Q3 FY25, surpassing its revenue targets. Caravan business is transitioning from traditional model to e-commerce and modern retail, which will enhance margins. However, this shift may impact volumes. The company is strategically transitioning from free to paid subscription while investing rupees 1,000 crore in content acquisition over 3 years, targeting 25 to 30% of new music release. The company content acquisition strategy should drive strong momentum in licensing revenue and expand its market share in newly acquired content. With diverse monetization strategy and a growing digital presence, Saregama is well positioned for substantial revenue growth in the evolving entertainment landscape. Currently, the stock trades at 32.3 times FY26 earnings, which appears reasonably given the company's growth and investment prospects.
All right, we take that point. Thanks a lot for that. Just keep an eye on a couple of, oil users. So we have Pidilite, which has moved higher. Pidilite is among the users of, vinyl acetate monomer. And then you have a couple of these paint companies as well. They are seeing some pickup. Berger Paints, for instance, has moved to the high point of trade. A lot of stocks on our radar. We'll take a short break, come back, discuss all of them. Stay tuned to Chartbusters. Well, in an otherwise strong market, there's no respite for metals. They continue to tread lower. So we have Nalco, SAIL, Jindal Stainless, JSPL, all of them. In fact, the metals index comes up for you. That too itself is at the low point of trade. But speaking about commodities and speaking about oil, metals, all of that, Sources tell us that oil companies are set to mop up nearly 9,000 crore rupees in FY26 on the back of LPG cylinder price increase. Sapna joins us to tell us more about what she's gathering out here. Sapna.
Yeah, absolutely right. Around 9,000 crores is the rough estimate as to how much they'll be able to kind of, pick up from the 50 rupees hike on LPG cylinders across the board, Ujjwala as well as non-Ujjwala consumers. Well, the point to be kept in mind over here is the fact that these monies which will be accruing to the OMCs, that will basically help plug the ongoing LPG losses. So that aspect needs to be kept in mind because FY26 also, we know the numbers lie. So basically, 250 rupees was the loss per LPG cylinder that they have been incurring so far. Hopefully, this 50 rupees hike should bring that loss down to around 200 rupees per cylinder. So there will still be some kind of an recovery, but at least that will get addressed to an extent. That's one. Second, also in terms of the 2 rupee hike on petrol diesel that has been effective, has already been done. That around 32,000 crores is what is likely to accrue to the exchequer. So the mechanism will be as such that the oil ministry is likely to seek a cabinet nod, basically to access that money in order to compensate the OMCs for losses that they've incurred in the previous financial year. And that number we already know, around 41,338 odd crores. So in total, you are looking at that number just for the last financial year. Now this year, we really don't have the under recovery LPG number so far. But we do have, two sets of numbers. That is basically 32,000 odd crores is what they expect to get to compensate OMCs for LPG losses for the previous year, and 9,000 odd crores this year. This is the math as of now. It depends on how crude price behaves. We have also been given to understand that this 2 rupee hike in the excise is being absorbed by OMC simply because the margins have improved because of the crude oil softening. So from $83 to around $75 odd is the average cost of the inventories, which is now likely to come down further substantially. And going forward, in case oil stabilizes around the same levels, of course, the indication is that there could be some headroom for a price cut as well.
Okay, all right. Thanks a lot for that, Sapna. Well, let's shift focus to another sector, realty. A lot of news and updates trickling in from a couple of real estate companies. Vinny joins us to fill us in with more on that. Well, Vinny, tell us what you're picking up. I believe you enjoyed the game yesterday. Unfortunately, Mumbai Indians didn't come out on top. But for the time being, tell us about these companies.
Absolutely. The game was amazing as well, a close match there. But we're seeing in terms of realty space, Godrej Properties, that's the first one I'm keeping an eye out on today. With the Q4 business update coming in, a good update coming in from the company, highest ever quarterly bookings that they've seen, 10,000 crores for the first time. Now, what is interesting is that the guidance which the company had given for FY25 was around 27,000 crores in terms of booking value. They have managed to beat that guidance, and their booking value is now coming at around 29,444 crore rupees. This is the booking value, which is up 31% on a year-on-year basis. So yes, that's a good performance coming in from the company's 7th consecutive quarter that they are achieving more than 5,000 crores in terms of booking value as well. So interesting update there, and that is why the stock is in focus. Now, Sobha Realty on the flip side, it's not that great a set of numbers in terms of the update that has come in from the company. Sales value, yes, they have seen a growth on a quarter-on-quarter basis of 32%, year-on-year basis growth of 22%. But what is a bit of a miss is the guidance which they had given. It's below the guidance in terms of they wanted their sales to be at around 6,644 crores, which was around FY24 value, which is still below that level. So yes, it's below what the company was expecting, and that is what one is watching out for in terms of a bit of a worry. Though obviously launches and everything has been in line, highest ever launches that the company has seen as well, and highest ever average realization. That is something that I think the street is liking. Now, other than that, Brigade Enterprises, this is not a Q4 update, but they have signed a joint development agreement for a Mysore project. The gross development for value for that is around 225 crores. So important to keep an eye out on this real estate stock as well.
All right, we take that point, Vinny. Thanks a lot for that. Indeed, a close game, Nigel. I was at the stadium as well.
Oh, you're together?
No, not together. The thing is that I've never seen Mumbai Indians lose in Wankhede every time I've been at the stadium. So maybe Vinny was the jinx that broke that streak. But be that as it may, we're not blaming you. Tell us a little about Piramal Pharma. There's a brokerage note out there.
Absolutely. So, Piramal Pharma, that's in focus because we have Goldman Sachs that has initiated coverage on this one. Buy rating, target price of 275 rupees per share. What Goldman Sachs is highlighting, they believe that Piramal is well placed within the coverage to actually see good growth in terms of good profit as well. They expect the PBT margins to jump from 3%, which was in FY24, to around 16% and more than that in FY28. And what will lead to this growth? CDMO business that is doing well. They're seeing a turnaround on that front, focusing more on the small molecule side of the business. So that is a thumbs up coming in from the company, as well as growth is something that will be good in this business from FY26 and onwards. Now, other than that, the CHG business that is expected to see a capacity ramp up, so that will lead to growth in that business. And consumer side of the business, consumer healthcare side, that is also seeing a turnaround. So three key positives, three key segments, seeing a turnaround, seeing a growth from FY26 and onwards is a positive for Piramal Pharma. And Goldman Sachs has one more note that has come in as well, and that is on Suven Pharma. So one more CDMO player. So overall, they're positive on the CDMO space, and they believe that this also will see a good growth from FY26 onwards. They're expecting a turnaround in the AG chemical macros as well, successful integration of the newer businesses that has come into the company, and potential approvals of newer drugs is something that will be driving the growth for Suven Pharma. Initiated coverage on this one as well. Buy rating, target price of 1,350 rupees per share.
Okay, all right, Vinny, thanks a lot for that. Well, for the time being, though, we'll slip it. No, I think no, we can't let Vinny go. That's right. Vinny, you've got your hands full.
Absolutely. Now let's
what a busy day after seeing the IPL game yesterday, coming in the morning.
It was as busy as the match was yesterday, watching and seeing the wickets or seeing the sixes and fours going. So it was as busy as that today as well for me.
But next time you and Mangalam don't go, I'll go. Hopefully, I'll be the good luck charm.
All three of us can go. Let's do that.
Absolutely. But for the time being, tell us about one more stock. I believe you're tracking Interglobe Aviation. Tell us more.
So yes, Interglobe Aviation, now this is actually more of an expectation coming in for Q4. We had that analyst day meet also, which came in just a few weeks ago, where the company had management highlighted about good numbers in Q4. So obviously what Morgan Stanley is highlighting, they're maintaining the outperform rating. Target price has been raised to 6,085 rupees per share. And they're talking about that strong performance in Q4 driven by yields improving as well. They expect, multiples to re-rate. Why? Going forward from here, ramp up in international operations, tight industry capacity, tailwinds, that is something coming in from the business class ramp up that they've seen in 2024. Weakness in fuel prices in the recent time, crude prices, and fuel accounts are around 40% of their cost. So that is a positive on that front as well. And do not forget, Indigo currently is trading somewhere around 10.4 times in terms of the FY26 EV to EBITDA against the pre-COVID median, which was 8.5 times. So a bit more on that front, but COVID was a different scenario that we had to see. But good numbers coming in Q4, and that is what one is expecting this time. Morgan Stanley is overweight on that front.
All right, thanks a lot for that, Vinny. Let's go across to Abhishek now. A couple of brokerage notes coming through on banking names as well. Abhishek, before you speak about the brokerage notes, did you go for the match yesterday or no?
No, I didn't go for the match. So we have a couple of brokerages writing on financial sector. So Goldman Sachs has written, they have upgraded PNB Housing to buy. The target price has been set at 1,184 per share. They say that there is improving visibility of delivering loan as well as robust profitability for the entity. Axis Bank, they have upgraded it to buy. New target price is 1,228 per share. They say that valuation mean reversion as seen, is good for them, and profitability and growth are nearing bottom in H1 FY26. So the company is a beneficiary of liquidity infusion in the system by the regulator, which should act as support for the loan growth trajectory for the bank going ahead. SBI, they have upgraded it to neutral from sell. Target price is about 823 per share. They say that the risk reward is balanced as of now, with the stock having derated from 1.1 price to book value to right now about 0.9x 12-month forward price to book value. So this valuation, as per them, is fair for a 90 basis point ROA, that is return on asset franchise. Now we also have CLSA on Bajaj Finance outperformance target price of about 11,000 per share. They say that with asset quality headwinds receding, they expect Bajaj Finance to gain its class from FY26. So the investors' focus will shift shift from being on net interest margin asset quality towards the loan growth trajectory for the lender. So even if ROA declines from the current level of 4% to around 3.5%, they say that over the next 5 years and with AUM growth of 25%, the PAT CAGR will be at a healthy 22% to 23%. So this is one of the key reasons that they have written a note on it, and they say that no other large stock in their coverage and probable over the next few years will see such a trajectory on profitability. Back to you.
All right, Abhishek, thanks a lot for that. We probably get Abhishek to the games next time as well. So
all four of us.
All four of us. Nigel, Abhishek, Vinny, and we'll all go for the games. But as we do that, let's get you some good news. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. You can download the app from the Apple Store or the Google Play Store, or can just scan the QR code, which is there for you on the screen. Welcome back. You're watching us here on Chartbusters. Let's listen into Ruchir Sharma, chairman at Rockefeller International, discussing expectations of the Fed, how tariffs could impact global growth, and a lot more that's taking place right now in the world, which is causing so much uncertainty across global markets.
I think that he's changed his tone a bit, because in the couple of weeks ago after the Fed meeting, he was tempted to use the word transitory again, but I think that he sort of walked back on that. But the market doesn't believe him. The market thinks that he's going to capitulate soon enough, because that's been the Fed's track record for the last couple of decades. That at the first sign of economic trouble, they tend to capitulate. They did that last September, and even before that with SVB. But there's a long history of the Fed having capitulated, and the fact that the Fed has missed its inflation target now for 5 years in a row and will do so for another 2 years. So I'm really surprised in a way as to where the market is pricing in these rate cuts, but also sort of understand it, because that's been the Fed's track record going back the last few years, if not decades. Obviously, global growth is going to take a hit, but I think that at the end of what's going on here, and something we've spoken about as well, is that the rest of the world is laser focused now on trading without America. So what's happening there is that they're sort of expediting their trade deals of trading with each other. As I've sort of written in the past as well, that if you look at the 10 fastest growing trade routes in the world, only 2 now involve America, 5 involves China and other countries. So the world is moving on, but obviously in the short term, everybody gets hit. But this is a very different kind of market reaction and even downturn that, as you know, that this time, even after the carnage in the international markets over the last couple of days, the US market has really underperformed, and the dollar, in fact, has weakened through this all. We went into this with the US being the most overhyped, overowned, and overvalued market in history relative to the rest of the world. That never before had so much capital flown to the US. 80% of all flows into the stock market globally went into just the US market this decade. So there's a lot of unwind of that which has to happen, and a lot of the capital came in unhedged, expecting the dollar to appreciate. So that's why, that was something that we discussed was the mother of all bubbles, and that bubble is now being pricked. But this credibility damage is going to last, and I suspect that over the next few years, the US stock market and US assets are going to underperform, no matter how this tariff drama is resolved.
Well, keep an eye out on the markets. We saw a bit of an intraday dip, but it appears, at least as of now, that dip has got bought into. Cipla and Dr. Reddy's, both of them should come up for you on the screen. Both of them have perked up in the last few minutes. So let's get up an intraday chart out there. You have SBI Life as well, that was trading in the red. That's moved into the green. So good going on that. And ITC, that's a larger weight on the index, has been a bit of an underperformer. That one as well has moved up. So, the markets are now holding with the gain of close to around 200 points. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour is coming up next.